Hello from Chicago, Alan Knuckman here at the CME Group with an energy commentary focusing on crude oil. Crude made month highs, spiked up to near $53 in an overnight session, closing at $52.25, up 50 cents, which was a 1% gain. The Syria strike got the markets on the move, up here again, like I said, to month highs, reversing that double bottom that we saw last week at 47. Now, from a geopolitical standpoint, price shock potential in crude oil is to the upside. Any potential disruption in the supply gets this market on the move, though in the last couple of years, it's lessens its impact as opposed to what used to happen when there was news or issues out of the Middle East. What's important to focus on here, for me anyways, are the commodity correlations. So last night when we saw the strike on the news, crude oil did make an immediate run up to that month highs, like I said. Gold was also on the move to the upside, getting up to 1275 or so, multi-month highs there. And we saw the immediate reaction in stocks, a sell-off. But through the course of the session today, stocks did come back and are positive. So you're seeing the macro markets remain bid strong, and you're seeing a correlation between crude, gold, and stocks remaining up near their highs. So let's wrap this up on a weekly basis. Last week we saw crude oil up more than 5%. Like we said, that double bottom at 47 and it closed above 50 at 50.60. Now this week we built on those gains, which is important from a technical and a psychological standpoint, up 3% on a weekly basis. Now we're approaching the bottom of the sideways trade. I'll talk about that in just a second. But some of the fundamentals still could be viewed as pressure and as bearish in the long run. The rig count continues to move higher. The number that came out today, Friday, was an increase of 10 rigs here in the U.S. That's a 12th consecutive week in a row where, obviously, as oil prices have climbed, so has the production and the rigs coming back online. If you look, refiners are also increasing their output with the summer driving season up ahead. So that could take some of the slack out of the market, but we still have a very, very high or all-time high inventory there in crude. And this news just hitting the market right now, President Trump has announced he's working on a new executive order to open waters around the coast of the United States to oil and gas drilling. So that in the long run is negative for the energy market, but it's going to take some time for that to come online. So net, a positive week, a positive day, and that price shock with the geopolitical news overnight. Now, looking at the price, which is the most important, we're back to the channel between 52.50 and 57.50, the year high there. A move back inside that channel can be very much a positive for this overall bullish trend. Oil is not over. So you've got to respect this recovery rally, and let's keep an eye on 50 down below psychologically and 55, which is the midpoint of that sideways channel. A push above 55 targets the highs, and then a larger move to 62.50 from a measured move objective. Alan Knuckman here at the CME Group, focusing on energy.